to our channel where we dive deep into the latest market trends today, Friday, the 7th of March 2025, afternoon from Payroll, and provide insights to help you make informed trading decisions. In today's analysis, especially Bitcoin, we're breaking down the latest US payroll numbers, the Federal Reserve's shifting approach, China's role on destroying Bitcoin, and what it all means for the markets going forward. If you are actively trading, this is a crucial update. So stick around as we uncover the new risks and opportunities in the markets. Risk disclosure: trading and investing in financial markets involves sustained risk and may not be suitable for every investor or trader. The content shared in this video is for information purposes only and doesn't constitute financial advice. Always conduct your own research and consult with professionals before making any trading decisions, if possible. Past performances are not indicative for future results. Before we dive deeper into today's market outlook, we need to discuss something that has been hovering over the cryptocurrency market, especially Bitcoin. Now, while Bitcoin has been rising as an asset class, one of the biggest risks to its continued dominance coming from China. China has the power to impact Bitcoin's future, and here's why. Over the past few years, the Chinese government has shown a pattern of controlling its financial ecosystem with an iron fist. They have already cracked down on Bitcoin mining within their own borders, and if China were to ramp up efforts to ban or heavily restrict Bitcoin trading, the global market could see a massive sell-off. China also controls a large portion of Bitcoin mining. At one point, they were responsible for over 60% of the network's hash rate. The level of control giving them a significant leverage over the security and stability of Bitcoin network. If China were to push for stronger regulations or take action against Bitcoin in a major way, it could drastically affect Bitcoin's price and, of course, market cap and liquidity, and even its overall adoption worldwide. While Bitcoin's decentralized nature is one of its strongest selling points, governments like China have the power to disrupt the network through regulatory actions, cutting off major market participants and, of course, putting pressure on mining operations. If China takes such steps, we could see Bitcoin face a level of volatility and regulatory uncertainty unlike anything we've seen before. Now, let's see what happened today. First up, talk about the latest US payroll data. In February, here you can see payrolls grew by 151,000, which is significantly below the market's expectations. As you can see on this graph, this underperformance adds to concerns about the health of the labor market, especially after months of aggressive tightening by the Federal Reserve. This shift in the job market could be a sign that Fed's policies are starting to take hold, or it could just be a temporary blip. Time will tell. Now we turn to comments from Federal Reserve Governor Michelle Bowman, who stated that the labor market and broader economic activity will be the driving forces in upcoming policy discussions. In other words, we are entering a new phase where the Federal Reserve is going to be focusing more closely on economic activity, beyond just inflation. This is a big deal, as it suggests that the Federal Reserve may ease up on its aggressive interest rate hikes if the economic slowdown continues. Speaking of the Fed, let's talk also about what Jerome Powell, chairman of Fed, will be facing this week in about 90 minutes from now on. Powell is scheduled to speak just ahead of the Fed's communication blackout, and there's a lot riding on his words. With the global trade landscape becoming more unstable, we could see new inflationary pressure arise, possibly forcing the Fed into a very difficult position. On top of that, public expectations about inflation might be shifting in a way that makes the Federal Reserve's job even harder. If Powell signals any little concern about these risks, expect a volatile market response and possible crash down. So what can we expect in the markets, especially in Bitcoin, if you're trading it? With payroll growth slowing and the Federal Reserve shifting focus, there are a lot of moving parts to watch. For one, a more dovish Fed. If Powell acknowledges these new risks, could lead to a weaker US dollar. If the US dollar weakens, gold and commodity might catch a bit. And we could see a shift in equity markets as well. Sectors sensitive to inflation, like tech, could face some headwinds, while risk-off sentiment might push investors into bonds, yields, or safe haven currencies like the Japanese yen and the Swiss franc. For those of you looking to take advantage of market movements, now it's time to be cautious and strategic. If we take a look at volume profile of today and also yesterday, you can see how price action is gravitating toward key levels like the point of control or POC. This is this one. At around 89,000, and you can see how price action is gravitating each time every volatility back. These levels are very crucial to identify potential areas of support and resistances. Also on the other side, we have the next one, the value area of 87,000, and we had the value area high at around 90,000 to 90,500. These levels are very crucial. With the market potentially moving towards a soft landing, it's important to understand these levels and align your trades accordingly. After the data, the market went up, came back, went up, and came every time back again to this era. Right now, the key levels to watch are the value area low and value area high. We can see the market is in a low value zone, which suggests a potential for price to move higher, but this is only scalpers or short-term speculators, so don't get trapped by those bullish moves. If price breaks above the value area low, that can trigger a buy signal on the flip side, but only on lower time frames. If price fails to break the value area high, what it did, it could signal a possible shorting opportunity. Pair this with rate of change indicator to filter out false signals, for example. Now looking ahead, how do we trade with the Fed's shifting strategy? A dovish tone from Powell could indicate that the Federal Reserve's tightening cycle is nearing its end, which may give a boost to equities and commodities, particularly gold, of course. But if Powell signals more cautious or higher risks from global trade issues, we could see a flight to safety with the US dollar rising and stock getting hit. For traders, this means closely watching today Powell's speech and adjusting positions based on his cues. Some words to Crypto Summit today. Well, they won't have any impacts. With other words, zero impacts on what is coming. Why? Because this is just a meeting and they cannot say when, how large, and if totally to weight the Bitcoin or crypto-based basket and when it does take place. All you know is that there is the meeting today, so it has no reasons. The weight of global economic factors, fundamental factors, is much higher, and that makes a lot of concerns to the US government and, of course, Fed and globally to other nations too. Now, let's recap what you need to watch for and how you can trade it. But first, let's summarize the data of today. Number one, payroll data. The softer job number may signal a slowing economy. Copper prices are rising. That is a confirmation that the economy is slowing down. Number two, Fed's shift. If the Federal Reserve turns dovish, expect the US dollar to weaken and commodities to rise, what they do already. Number three, global risks. A trade war or shifting inflation expectations. Ukraine, China, Europe, tariffs could make this a volatile week, a volatile month, and of course, a volatile year. And number four, the volume profile and of course the price action itself. Watch the POC and value areas of critical levels of support and resistances. Stay nimble, make sure you're prepared for volatility in the coming days. Don't take any pullbacks for granted. They could be fake. At the weekend, possibly we would have a pullback to around 90 to 92, maybe some even higher. And that's a chance maybe to place a good sell. Why? Because the weekly, monthly, and daily trends are all strong bearish. Trade smart, manage your risk carefully. But before we go, here may be some more words. The comments from Federal Governor Michelle Bowman highlighting an evolving situation for U.S. monetary policy, with the central bank grappling with several factors that could complicate its decision moving forward. Here's maybe a breakdown. I can help you some of the key points and potential market implications. For example, labor market and economy activity. The labor market and overall economy activity are becoming central to discussions at Federal Reserve's meeting, FOMC meetings. This suggests that future policy decisions may be more data dependent, with an increased focus on the broader economy's health rather than solely information and inflation. The soft labor market report, as you mentioned earlier, aligns with this trend and may signal a shift in priorities for the Fed. Also, keep in mind all the shocks of the past, for example, 2020 pandemics, have created disruptions that might still be masking the true effects of Federal Reserve's policy. This implies that the traditional relationship between monetary policy, for example, interest rates, quantitative tightening, economic outcomes, could be less predictable than before. For example, labor market dynamics, supply chain disruptions, and changes in demand could cause inflation and employment trends to behave differently than in the past. Also, keep in mind, soft landing is still possible. Despite these challenges, Mrs. Bowman suggests a soft landing, slowing inflation without causing a recession, and that's still possible. However, this goal is increasingly at risk due to external factors like a potential global trade war and, of course, tariffs, which could reignite price pressures and shifting public expectations, which could undermine the Federal Reserve's ability to manage inflation and inflation effectively. And we have also, again, in now 75 minutes, Jerome Powell's upcoming remarks. He speaks at an economic conference again, just before the communications blackout, ahead of the March policy meeting, the FOMC. This is significant because any guidance or comments from Jerome Powell could give the market more clarity on the Fed's stance on rates and inflation. However, with so many new risks emerging, global trade tensions, shifting inflation expectations, slowing down of the economy, and so on, his message will likely be cautious and nuanced, making it harder to predict the Fed's next steps. Also, we have other market implications. For example, the equity market. Keep in mind, volatility likely. If Powell signals any concerns about new risks, for example, global trade tensions or public inflation expectations, there could be increased volatility in equities, especially in sectors sensitive to interest rates. The uncertainty around global trade could hurt risk sentiment, and of course, tech or growth stocks might be particularly sensitive. Inflation concerns, a trade war, or rising inflation expectations could put downward pressure, meaning bearish pressure, on equities as well, especially if the Fed needs to take more aggressive action. Bond markets, for example, yield expectations, with the labor market showing signs of softness and Powell facing new risks, bond traders may adjust their expectations for future rate hikes. This could result in a shift in the yield curve, and with longer-dated treasuries potentially seeing more demand if the market expectations to the Federal Reserve to slow its tightening path. Inverted yield curve is an inverted yield curve. It is curve where short-term rates are higher than longer-term high rates. We have also the US dollar on the other side. Dovish Fed talk, for example, if Powell strikes a dovish tone, indicating that the Fed is concerned about the economic risks, the US dollar can become weaker. We have also oil. A trade war could, for example, exacerbate price volatility in oil markets, especially if it disrupts global supply chains or increases inflationary pressures. And we have also the gold market. With inflation and economic uncertainty rising, gold could benefit as a safe haven. Also Japanese yen and the Swiss franc. A dovish Fed combined with heightened global risks could push gold prices higher. Now, if Bitcoin manages, and you see now in the meanwhile, we are from 91, again below 88, at around 87,700. If Bitcoin manages to break 92K and hold above it with volume confirmation, that could trigger further upsides, especially if momentum builds from fresh market participants. It can be also a news catalyst, for example, something that might happen tonight or through the weekend or whatever. Also, Bitcoin's historical volatility is very high. Sometimes, even in bearish trends, there's a risk of sudden rallies. So, I could be very cautious, and I recommend it to you also to be very cautious, very careful, avoid being overly aggressive in a short term. Based on my opinion, based on what you can see here, for example, are also divergences of the trends in different time frames. In 5 minutes or 15 minutes, for example, you have an uptrend. On hourly or 4 hourly, you have a downtrend. On 30 minutes, you might have a consolidation. On daily, weekly, monthly, you have very strong downtrend. What will you do? I'd lean towards a very short-term outlook with a sell zone to around 90 to 92K, meaning each time the price rises to that level but is not able to break it, I sell Bitcoin. If you are trading in this zone, watch already for strong rejection candles, for example, long wicks. The market rises very fast, that's the best time to sell as confirmation to sell. For example, with volume profile, with volume, with RSI, MACD, momentum indicators. Additionally, stay cautious with a tight stop above 92. It would be very prudent in case the market defies expectations and breaks higher. Overall, if the market doesn't break above 92K in a convincing way, then you see that the market is coming down. For example, to that level, 87. What does it mean? It means that the next target of the market is going for 86. If the market is going to break it, it will go to 85,145. This is very critical level because this is the area, the support area where the last rally of the last 3 days has started. If the market is going to that region, it means Bitcoin is targeting the lower level of 83,225 and 81,795. On the other hand, for those of you who say today is summit, cryptocurrency reserve, and Donald Trump nails it, well, My question is, if this summit is taking place today and also the next days, but why, with so much euphoria and also enthusiastic actions, Bitcoin is going down? And this is the very important question. Why is Bitcoin going down? The event is positive, but we see that the market data are so strong, they are pushing up. If the subject of the summit, crypto summit, would be very positive, so all news might they be very bearish, inflationary, whatever, they would show no impact. Instead, the market would start to rally to above 100 or even 120K. We are not saying that it is not possible. Of course, again, the market can go to every direction, but it needs a lot of catalysts, news, facts, numbers. Trading on hype or emotions end always in disaster and catastrophic losses. So keep that in mind. Now, that's it for today's market update. Be sure to like, subscribe, hit the bell icon for more in-depth market analysis, trading strategies. As always, we are here to help you navigate these uncertain times. I wish you happy trading. And my question is, what do you think about Bitcoin going in the next days or weeks? Please write it in the comments so we can share also your knowledge. Have a good time.